1 year ago, the gap between a median home in Prescott and a median home in Prescott Valley was $200,000. Today, it's $119,000. That gap didn't close because one town got hot. It closed because the two towns went in opposite directions at the same time. And if you're buying or selling in either one, that's the number that should change how you approach it. July's numbers are out. There's a lot in here, so let's take a look. Let's start with the broad look because the headline for the whole Prescott area is a good one. Through the end of July, we closed 2,304 sales area-wide. Last year at this same point, it was 2,020. That's 284 more homes sold, up 14.1%. The median sold price across all of Prescott is $481,000, up 0.4%, actually flat, and homes are moving faster. Year to date, median days on market is 38 days, down from 42. In July by itself, it was 39 days, down from 44, an 11.4% improvement. Now put those three together because the combination matters more than any one of them. More sales, flat prices, faster contracts. And we did all of that on fewer new listings area-wide. New listings are down about 3% year to date. That's not a hot market, and it's not a falling market. That's a market that's actually working where buyers and sellers are meeting at a number both of them can live with and doing it 14% more often than last year. There's one thing to clear up before we go town by town because it trips people up every month. July on its own was nearly identical to last July, 371 sales versus 367, up about 1%, so pretty flat. But the year is up 14%. Those aren't in conflict. A single month in a market our size is a small sample, and it swings. The year-to-date number is the one that tells you what's actually happening. So when I walk through each town, I'm going to give you both and where they disagree, and I'll tell you which one I'd trust. Prescott is the only area in this entire report where the price came down, and it didn't come down a little. Median sold price, $599,900. Last July, it was $660,000. That's down 9.1%, $60,000 off the median in 12 months. Now, here's what most people would expect to follow a drop like that, and that's fewer sales, but that's not what happened. July sales were basically flat, 157 versus 159. But year to date, Prescott has closed 925 homes, up 15% over last year's 804. That's 121 more families in a Prescott home than at this point last year. So Prescott is selling more homes at lower prices. That's not a market losing interest. That's a market that spent 2025 asking a number buyers wouldn't pay, corrected it, and got rewarded with volume. The homes that are selling are the ones priced correctly on day one, and the ones dragging down the average are the ones that came out at last year's number and are still sitting there waiting to find out. The supply side is tight though, and this is where I'd push back on anyone calling Prescott a buyer's market. Active inventory is 698 homes, down 10.2% from 777. Months of inventory fell from 6.4 to 5.1. Prescott isn't oversupplied. It's repriced. Those are very different things and they call for very different strategies. Now, flip every one of those numbers over. Prescott Valley's median sold price is $480,000, up 4.4% from $459,950. Up, not down. Sales are up 8% in July and up 11.3% year to date. 630 closings versus 566. And the speed is the real story. 33 days in market, down from 45. That's a 27% improvement. Year to date, it's 32 days versus 44. Prescott Valley is also the only one of the four towns where sellers brought more homes to market year to date. New listings up 2.8%, and buyers absorbed all of it anyway. Active inventory is flat, dead flat, up 0.3%. Months of inventory, 4 months. 4 months of inventory with prices rising and homes going under contract in about a month. That is the tightest, most competitive market in this report, and it's not particularly close. And this brings us back to where we started. A year ago, Prescott, $660,000. Prescott Valley, $459,950, a premium of $200,050. Today, Prescott, $599,900. Prescott Valley, $480,000, a premium of $119,009. The gap between the two towns shrank by $80,000, 40% in 12 months. In percentage terms, Prescott used to command about 43% more than Prescott Valley. Now it's 25% more. Two things follow from that. If you were priced out of Prescott last year, you may be closer than you think, and nobody sent a memo about it. And if you own in Prescott Valley, you've been quietly closing ground on your neighbor to the west for a full year, while the headlines were all about Prescott. Chino Valley was the busiest market in the region this month. Sales up 25%, 35 homes versus 28, and new listings up 25.6%, the only area in the report where supply grew in July. Normally, more listings means more inventory sitting around. Not here. Buyers took all of it and then some. Active inventory fell 21.6% from 176 homes down to 138. Months of inventory dropped from 5.8 to 4.2. Median price is $421,320, up 0.5%, flat, and that's fine. Chino Valley's story this month isn't price, it's speed. Days on the market went from 45 down to 30. Year to date, it's 28 days. Chino Valley is the fastest moving market in the area right now. Dewey-Humboldt needs one piece of context or the headline number will mislead you. July sales were 18, down from 30, a 40% drop. That looks alarming. It isn't. That's 18 transactions in a single month. One slow week moves that number. Look at the year instead. Dewey-Humboldt is up 25.6% year to date, 162 sales versus 129. That's the strongest year-over-year sales growth of any area in this report. Median price, $425,000, up 3.7%. And the supply story is the most dramatic in the whole region. Months of inventory went from 7.1 all the way down to 4.8, a 32% tightening. A year ago, Dewey-Humboldt had the most inventory in the area. Today, it's in line with everybody else. Days on market, 43, basically unchanged from 44. If you take one thing from this month, take this. Every single area in this report has less inventory than it did a year ago. Prescott down 20%, Prescott Valley down 9%, Chino Valley down 28%, Dewey-Humboldt down 32%, and every one of them is now sitting between 4 and 5.1 months of supply. 6 months is the traditional line between a buyer's market and a seller's market. All four are under it. So even in Prescott, where the price came down $60,000, that's a pricing correction happening inside a market that is structurally tighter than it was last summer, not looser. If you're selling in Prescott, price for today, not for last year. The market is absorbing 15% more homes than it did a year ago, but only at the corrected price. Homes anchored to 2025 pricing are exactly what pushes that days on market average up. And every week they sit costs you leverage. Selling in Prescott Valley, Chino Valley, or Dewey-Humboldt, you're in the stronger seat. Prices up, inventory down, and a well-priced home going under contract in roughly a month. Don't let anyone talk you into a Prescott-style price reduction. Prescott Valley's market isn't doing what Prescott's is. Buying anywhere in the Quad City area, every one of these markets is under 6 months of inventory. So don't come in expecting to steal something. But Prescott specifically is offering something it hasn't in several years, $60,000 off the median, and real negotiating room on a home that's been sitting a while. If Prescott was your first choice and you gave up on it, this is the month to look again. So those are July's numbers. If you want to know what any of this means for your specific street, your specific neighborhood, or your specific house, that's a different conversation, and it's one I'm always happy to have. Reach out anytime. Thanks for watching, and I'll see you in next month's market report. Bye-bye.